Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Ryan King, who's the Senior VP in Corporate Development and Investor Relations for Calibre Mining, who are a Canadian-listed, Americas-focused, growing mid-tier gold producer with a strong pipeline of development and exploration opportunities across Newfoundland and Labrador in Canada, Nevada and Washington in the US, and Nicaragua. Ryan has over 15 years experience in the capital markets, corp dev and IR, working for the likes of Kirkland Lake Gold and Newcore Gold, and has actually assisted in raising over $350 million during his career. It's going to discuss the history of Calibre Mining, obviously speak about the current project, the recent acquisition that they've been involved in, and also discuss local initiatives that they have in Nicaragua, plus a lot more. I want to give a shout out to our sponsors, Hawcroft, who are leaders in property risk management in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, and asset critical assessments, and more. Working across 600 sites globally, Hawcroft supports all areas of mining, resources, and mineral exploration. So if you're looking for any property or risk insurance management services, then visit their website at www.hawcroft.com, and all the details are in the show notes. Ryan, welcome to the podcast. How you doing?
Excellent, Rob. Well, thanks very much for taking the time to have Calibre on the show. We appreciate it and look forward to the discussion.
Yeah, certainly. And as we always start these podcasts off, I just wonder if you can just tell the audience a little bit about yourself, about your career, and about your background, how you got into the mining industry, and work us through your career to present day.
Absolutely, sure. I'm sure this is going to be a scintillating discussion about my past. No, yeah, so I'm a business degree as a background. I actually went to school and did computer science as well. And I was into computer science in the early 2000s, late 1990s, when that was a good time, and early 2000s, not such a good time, which maybe in hindsight, I should have stayed in that industry. Probably would have worked out pretty well. But no, it was probably 2003, 2004. I started to get involved in the junior mining space. It was an oil and gas deal to begin with. It was also a company called TLC Ventures Corp, which is an interesting name for a junior explorer developer. Interestingly enough, that company, TLC Ventures Corp, went through a name change, and it became Calibre Mining in 2006. And then it was probably 2008 at the time. Of course, Doug Forster and Blaine Johnson, the two founders of Calibre, were heavily involved in that, looking for assets and opportunities. And at that same time, junior entrepreneurs typically have more than one venture they're working on at a time. And we had just actually announced the deal called Terrain Metals, which was the acquisition of the Mount Milligan copper gold project in central British Columbia that actually Doug Forster was involved with in terms of discovery, delineation, and then selling to Placer Dome in a bidding war in 1991, I believe. So yeah, he sold the asset. It went through a decade of difficult permitting environment in British Columbia. It went through a decade of low metal price environment, acquired it back because what happened during the time in 2005 was Gold Corp and Barrick teamed up to acquire Placer Dome, right? And Gold Corp ended up owning this Mount Milligan asset along with a number of others. It was a development stage project in BC. We were able to acquire that in 2005 in a company called Terrain Metals. That company was run by ex-Placer Dome executives founded by Doug and Blaine. And we advanced that all the way through. I was doing capital markets, investor relations, and some corporate development stuff for Terrain. We raised money, advanced that project, did a bunch of drilling, did a bunch of permitting and engineering, and then we actually ended up selling it again. So Doug has sold that project twice. He sold it to Thompson Creek, which then went on and did that deal with Centerra Mining. So Centerra runs and operates the Mount Milligan project in central British Columbia. So we really focus on trying to do assets or trying to acquire, delineate, and build or divest of assets that will produce metal, real assets. 2010, we started another company called Edgewater Exploration. Now, another great name for a mining company or an exploring company. Edgewater, we acquired some assets in Spain and Ghana. And this was led by George Salamis and myself, another deal by Doug Forster and Blaine Johnson. We were advancing the Corcoesto gold project, almost a 2 million ounce project in the northern part of Spain, in Galicia. And unfortunately, we weren't able to advance that project past permitting. We actually got it permitted and we were advancing it, but then the government stopped us from progressing it any further, which was interesting because it was during a time of high unemployment, and we were looking to employ a lot of people and bring a new asset into production, but it did not work out. We pivoted, and we ended up divesting the Ghanaian asset into a company called Pinecrest, which eventually, as you just mentioned, became Newcore Gold. And Newcore has 100% of the Enchi Gold project in Ghana, and that's a fantastic project that's advancing towards pre-feasibility study and permitting now. And unfortunately, Edgewater is a vehicle now looking for additional assets to do something else with. During that period of time, the Calibre company acquired assets in Nicaragua, so exploration assets in Nicaragua, in the northern part of Nicaragua. And during that process, a gentleman by the name of Greg Smith, a great geologist, he's actually now working with Newcore Gold. He was a president and CEO advancing these exploration assets. And what we were doing was, if you think about it from this perspective as a prospect generator, we had a great land package. We had excellent targets during a difficult kind of market period. So we were out bringing partners in. So B2Gold became a joint venture partner on a property in the northeast part of Nicaragua. IAMGOLD became a partner there with us. Centerra actually became a partner, earning in partner with us. And then the last one was Rio Tinto. So there's copper, gold, silver, very prospective land package. Obviously, a lot had changed over the years, but nonetheless, they all invested capital into those projects. But nobody is a joint venture partner today. We ended up acquiring all the B2Gold assets in 2019, which we'll talk a little bit about. But during that period of time from 2010, 2011 to 2018, Doug started another company with his partner Blaine Johnson called New Market Gold. Okay, I know there's a lot of different things going on here, but as you do as a junior mining entrepreneur, so as Greg Smith continued advancing Calibre Mining, Doug took on the role of president and CEO of a company called New Market Gold. Now, we were out looking for production this time. Rather than looking for an exploration property, we were looking for production, and we ended up doing a deal with a capital group out of New York called Luxor Capital, who owned about 65% of this company, Crocodile Gold. So we ended up taking over Crocodile Gold, and one of the opportunities there was that this suite of assets, the three producing mines in Australia that had been around a long time, they were higher cost, they were lower mine life, hadn't had a lot of exploration done on them. And that is where Doug excels. That's his expertise. He's an economic geologist, and he can look at these opportunities. So myself, Blaine, Doug, and a number of other folks were involved in this company, New Market Gold. And fortunately, we had some tremendous exploration success there. And you may have heard the name before because it's been used a lot. It was called Fosterville. Fosterville was the name of the mine in Bendigo. And it became an incredible high-grade free gold asset um, very shortly after we acquired it. In fact, quarter over quarter, we were seeing higher and higher grades and better recoveries because of the free gold nature of the deposit. And we ended up merging that company with Kirkland Lake Gold. And Kirkland Lake is in Canada. They have the primary asset was Macassa, with at the time had over 2 million ounces in reserves, and the new market asset Fosterville, because it had had such great exploration success, it was one of the highest grade underground gold mines in the world, and it was getting higher and higher in terms of grade. So we merged those companies, but it was quite frictional. Actually, a lot of shareholders of Newmarket were kind of opposed the deal. They didn't see the what at the time was that they didn't see the synergies, because you've got Canadian assets, then you've got Australian assets. So why do this? Well, in the end, this actually worked out incredibly well for shareholders. Now, the gold price was not running, right? The gold price was more or less constant or flat around $1,300 an ounce, maybe 1,400. And this was 2015 through 2017 when we had Newmarket. We merged it with Kirkland Lake in end of 2016, and the pro forma company went on and did incredible returns for shareholders. So KL Gold was the new pro forma company. And I believe it went from about $6 to $65 a share over the course of the next 3 years. Then they acquired Detour Lake in Canada. And then actually the whole entity was acquired by Agnico Eagle. So a tremendous outcome for shareholders. And that was a business combination. So Kirkland Lake and Newmarket and a business combination. Kirkland Lake was about 55 or 57%. And I think Newmarket was 43% in the pro forma entity. So I was involved in that outcome. That was a great outcome for shareholders, and I remained at Kirkland Lake for a period of time with Tony McCooch and the team. Along the way, Darren Hall became the COO of Newmarket and then the COO of Kirkland Lake. So that's where we met with Darren. And Darren's track record is just tremendous. He's got over 30 years with Newmont, looking at ways to optimize assets in their portfolio. And that's really what he did for majority of his career. And then at the end, he ended up overseeing probably over 50 or close to 50% of Newmont's EBITDA, probably years, I would imagine 2009, 2010 through 2014, 15. And he was overseeing maybe 8 or 9 operations, like big operations, Asia Pacific. And I think somewhere around 20,000 employees. So Darren became the CEO, and where Darren and I really started to work together closely was when we acquired the assets. So post Kirkland Lake, Darren and I and Doug and Blaine started to look for additional assets for Calibre at this time, because we had just gone through buying production, looking at ways to optimize. You have to get in the game, right? And the game is a producer. You've got to get in that arena. And so fortunately, we were able to do a deal with B2 in 2019 to acquire Limon and Libertad and the surrounding mineral concessions in Nicaragua. And given Darren's expertise and his experience, we were able to unlock a new operating strategy and go from what we were originally thinking was about 50,000 ounces a year to produce that first year in 2020, the first full year, we produced 136,000 ounces of gold. So really able to unlock extract the value from those assets. And then that allowed us to then reinvest that operating cash flow back into the assets in terms of development, expanding our hub and spoke approach, and then in exploration. And that's what really set up the platform to be able to go out and then acquire Fiore Gold in Nevada. And in my view, the big transformational moment was in 2023, where we acquired Marathon Gold. The timing was fantastic, and a lot of times you'll hear me talk about this. Timing in this business is highly critical, right? We have to take the macro picture and assume that that's going to play out in our favor. So 2023, the gold price really hadn't started to run too much yet. But we were able to do this deal to acquire the Valentine Lake gold mine. which at the time, 5 million ounces in all resource categories. It was 50% through construction, likely between 50 and 70% through detailed engineering. So we were able to pick that up for about $250 million. And we took on the Sprott resource lending liability and project financing that came with it. So I believe that was a transformational moment, a significant moment for Calibre to diversify the portfolio into Canada, which is obviously a tier 1 mining jurisdiction, and Newfoundland, a tier 1 mining location and province within the country, very supportive of mining. And on the back of that, with Darren's expertise, the team we put in place, we were able to advance this, bring it up to 98%, 99% detailed engineered. With that came, the realization that, okay, when we acquired it, we knew that there was going to be, through our due diligence, we knew there was going to be additional capital requirements. And so here we are today with the asset just about finished construction and making the transition into operations in the next quarter or so. A pivotal moment for us to acquire that, see it through to operations happening very shortly, and then transition from basically a Central American gold producer to a diversified global producer with 400,000 to 500,000 ounces a year of production. So a nice few years for you. A lot of detail there, but sets the stage for where we are today.
Yes, certainly. If we look at your Valentine mine expansion from 2.5 million tons up to 5 million tons per year, what is the timeline for this? And when will you put out a technical report? And also, I suppose, what does the payback look like as well?
Sure. Yeah, so let me just back up a little bit here. And there was the last technical report that came out on the Valentine asset in central region of Newfoundland came out by Marathon Gold that outlined a phase 1, 2.5 million ton throughput, and a phase 2, which would ramp it up to a 4 million ton mill throughput through the plant. Their timeline was essentially phase 1, 2.5 million tons in 2025, and ramping that up to phase 2, the 4 million ton, roughly about 2028, 2029 timeframe. With the team that we have in place now, looking at the asset that we see in front of us, we believe that there's going to be an opportunity to optimize that plant a little further. And I say that for a couple of reasons. One, obviously Darren's expertise in mining and milling and looking at these types of opportunities in terms of how we can extract value and how the mine plan was originally set up. And two, when we acquired the asset, we saw tremendous exploration upside, right? And why hinder ourselves from additional throughput and additional metal production if we assume that we will have that exploration success? But also looking at the asset, it's got 2.7 million ounces currently in reserves, but it's got a total of 5 million ounces in all category resources. And if Darren were standing here today, he would say, look, we mine to the resources. That's how we mine the bathtub or the open pits. And that's what these are, 3 different open pits. But I think, importantly, when we look at the work Marathon had done, so Marathon was not a producing company. They were a junior gold developer that had some success in Newfoundland. We're developing this property. And just a bit of history here is that the first deposit called Leprechaun, that was discovered in about 2011, right? And they quickly started delineating what the open pit would look like. 2015, the Marathon pit was discovered, and then started delineating a new resource and a new deposit there. So they had this 2-pit resource base, in their view, enough to go ahead and start engineering and looking at what could this be an economic mine. Well, through that process, these 2 pits were separated by multiple kilometers, maybe 6 kilometers or so, And through that process, you do what's called condemnation drilling to see where you're going to put your infrastructure, your power, your mill, your site infrastructure. Well, that's when in 2000, probably 18 or 19, the Berry pit was discovered under a bit of cover, right? So interestingly enough, now it becomes a 3-pit mine plan. I think about 350,000 meters of drilling have been done to outline those three pits. However, probably 90% of that drilling was delineation and infill drilling versus pure exploration drilling. We will look at this this big fault that goes through the property. It's about 30 to 35 kilometers long, but only about 7 or 8 kilometers of that fault have been tested. And only a minor portion of that has been tested. You know, so it's telling that there could be tremendous exploration upside when you find a third pit under a bit of cover. Well, lo and behold, it was probably November of last year, after a pretty significant initial drill program, we discovered mineralization about a kilometer southwest of Leprechaun. So we hit 172 meters of 2.4 grams per ton gold. We hit 95 meters of 2 grams. We hit, I think it was 50 meters of 3 grams. So we're starting to delineate and understand the orientations and geometries of a new ore body. And that's within the first 12 months of exploration, pure exploration work on the property. It looks very, very prospective. We're very excited about the upside. So that now you're thinking, okay, we are going to have exploration success. We are having exploration success. We do believe that we will convert some of those resources to more reserves and mine more material. And so when we go back to that 2022 study, the guy started looking at, okay, what are the opportunities here when we look at a throughput plant? Could we produce more metal at and have a very attractive return? So guys have been doing, over the last 12 to 18 months, have been doing more technical studies on the plant, and we haven't even looked at the mine plan yet, right? So given the metal price environment we're in, I think reserves in the open pits were calculated around $1,650 per ounce gold, right? Resources probably calculated around 1,800. And you know, maybe there's opportunities there, but one of the things we have seen is that when we've done some what we call ore control drilling, so 9 meter by 9 meter ore control drilling in the Leprechaun pit and the Marathon pit. And what we found is we found more ore tons. So Leprechaun, for example, I think we found about 30% more ore tons for 29% more ounces at about a 1% increase in grade, right? And I believe we've now got and that's versus the 2022 reserve. So on the same level of benches. You know, it's not representative of the whole deposit, but a portion of the top as we do this 9 by 9 meter ore control drilling, giving us an indication again that, hey, this is very positive. We are seeing some upside here. So the technical studies looked at what could we maximize the throughput to with the plant that has been designed. And of course, they've been 50% through construction. So you can't change too much, but you've got to stay within the confines of the permits and approvals. You got to stay within the foundations and footings that have been already put in place. So based on that, we believe that, again, you know, we haven't finalized these technical studies, but we believe there's an opportunity to take it from 4 million ton of phase 2, probably up to about a 5 to 5.4 million ton throughput. And if you look at the capital to do that, so in the technical report that Marathon did, the capital, I believe, was about 70 million Canadian dollars to go from 2.5 to 4 million ton. So you're roughly about $50 million a ton of capex. So if we think about that, now roll that forward and go, okay, I want to go from 2.5 to maybe 5 plus, you're probably in about the Canadian $125-135 million range to take it to that capex. So when we look at that, we look at the current mine plan, again, no optimization of that mine plan, which we believe there will be able optimize. You could see that this would lead to probably a slight reduction in grade, because you're just pushing material rather than stockpiling too much. So a slight decrease in grade, but a significant increase in throughput, which likely leads to about a 20% plus increase in metal production. So, as we work through the technical studies, we'll understand that better. But looking at that and looking at a conservative metal price environment, we believe the payback would be very, very quick. The internal rate of returns on this would be fantastic. And the best place to, obviously continue to invest in more of your dollars is at the current operation, at a current gold mine. And again, given the exploration success we're seeing, we believe this is a very prudent approach. But, we want to see another full year. So in 2025, we had earmarked somewhere around 80,000, 90,000 meters of drilling this year. Right. And that drilling was going to be focused on pure exploration drilling, looking for new areas, expanding inventories or expanding discoveries, expanding resources. And, this year will be an exciting year from a pure exploration drilling program. I think currently we've got 2 or 3 rigs operating. That's going to ramp up later in the year as we work through the construction period, complete that construction and move into operations, allowing for more room in camps to allow for more drilling operations to extend that exciting exploration. And then we'd be in a position very likely in the first half of next year of 26 to then put out an updated technical report to talk about what this would look like. But internally here, we're getting close to a position, aside from, as we work through this merger with Equinox, and we'll get to that. But aside from that, we were putting ourselves in a position such that we could have an internal study to our board, looking for funding to then start, additional detailed engineering and planning and putting capital down for long lead items, such that we could be in a position to start construction of that phase 2 even next year in 2026, fast tracking this approach to getting to 5 million tons, probably by full year or at least half year 2027. Pulling this forward from 29 to 27 and increasing the throughput, we believe has tremendous return for our shareholders and increasing metal production.
Obviously, as you just mentioned, your recent transaction with Equinox, will there be a rationalisation of obviously assets once the deal's closed? And also, how will you figure out what ones to keep, what ones to sell off? And would you be adding any additional assets within Canada into the group?
Good question. And maybe before we get there, it's probably worthwhile just to give a high level overview of what we've done here.
Yep.
Equinox Gold, as some of your audience may know, has recently acquired the remaining 40% of the Greenstone asset in Canada. They now own 100% of Greenstone, which this year they've guided 300 to 350,000 ounces as they continue to ramp up this Greenstone asset in Ontario. So a low cost, long life, quality asset in Canada. You couple that with Calibre's Valentine asset. This asset is now operations starting in early Q3, ramping up to what the feasibility study was originally was almost 200,000 ounce a year production profile for the first 12 of a 14-year reserve life. And as I mentioned, I believe that we'll be in a position to extend that. But you couple those two together, and you're looking at probably the second largest Canadian gold production profile out there, second to Agnico Eagle. So a tremendous opportunity to mix these companies together to unlock this type of value. And when we look at something like that, when they're at nameplate capacity, you're roughly 550 to 600,000 ounces a year at the beginning of their life, low cost operations generating a lot of free cash flow at these prices. It presents a very tremendous re-rate opportunity. When when we see it today, as we look at it today, the combined pro forma company would be valued at a roughly 4.7 to 4.8 billion US dollars. And when we look at peers in that environment in terms of 600,000 ounces a year, I'll give you an example. Alamos Gold produces about 600 to 700,000 ounces a year. I would say probably 85 to 90% of that production is coming out of Canada, right? So, I'm looking at just our Canadian assets to, that whole consolidated production profile. And they've got about 11 to 12 billion dollar market capitalization. And then you layer on all the other assets that are in the portfolio in the pro forma company. So you've got Nicaragua, you've got the Brazilian assets, you've got Californian assets. So there's a tremendous opportunity. And I think guidance or midpoint of guidance for the pro forma Equinox Calibre company would be about 950,000 ounces on a path to 1.2 million ounces a year with additional upside and opportunities. I think we kind of set the stage there of Equinox and Calibre and what that looks like. And I think it really truly believe that there's an opportunity for re-rating there. Darren Hall will come in as the chief president and chief operating officer. So he'll be responsible, like he's done for many, many years, looking at assets and unlocking value from that portfolio of assets. But yes, as Darren does this, and as he works through, the core assets and, the core being Greenstone, Valentine, Nicaragua, ramping that up and ensuring that the cornerstone assets are delivering, then looking at all the other assets in the portfolio, absolutely. I'm sure there will be something at some point in time, but we're going to be very methodical about this. We're going to go through all of the assets and see what the strengths, weaknesses, and opportunities are. Fortunately, Rob, we're in a fantastic environment for gold companies, right? At over $3,000 an ounce, the macro environment, as I mentioned, we're in a fantastic environment for gold. I don't think we're seeing that reflective quite yet in the gold equities, but I believe that's coming. And particularly when you look at a company like Calibre and Equinox, and then you compare it to an Alamos, one of the reasons why Alamos and Agnico get the tremendous valuation that they do is because they've got a track record of meeting or beating expectations on a regular basis. I believe New Equinox will start to present that to shareholders, building trust, building confidence with Darren overseeing those operations and delivering. I believe that that's going to be a tremendous re-rate opportunity for shareholders. So yes, we will look at rationalizing the portfolio. Yes, we may look at divestitures, but we really want to optimize this portfolio and unlock the true value of what can be with this portfolio and ramping up these Canadian assets.
Yeah. Obviously, Calibre have demonstrated obviously a proactive approach to mergers and acquisitions. I just wonder if you can share some insights to the company's criteria, obviously for selecting acquisition targets, and how they assess their potential value.
Mm-hmm. Yeah, no, that's a really good point. What I'll start with is as an entrepreneur, Doug, Blaine, both founders and owners, significant owners of the equity, and we really try to align ourselves and think like shareholders and align ourselves with shareholders. And what do shareholders want? Shareholders want share price appreciation, maybe buybacks, maybe dividends, right? So we really align ourselves with that way of thinking and setting a North Star or a goal of building a, in this case with Calibre, it was to build a multi-billion-dollar company, which, if you look back from 2018, 2019 to now, that we've delivered on that. But the focus here is whatever we can do as a business to ensure that it's going to have a positive impact on that share price appreciation, right? That is a shareholder's, that's what shareholders want. They want the share price to go up. And so we're looking at our business. Okay, first and foremost, let's go back to 2019. The goal was buy production. We were able to buy production. Now, at the time, there was a lot of moving parts there. There were higher costs, there were lower mine life, but we saw some opportunity. We saw some opportunity to maybe look at a different operating strategy and then deploy some capital back into exploration and see what else could be done there, right? So that then unlocked tremendous value, not only for Calibre, but because we did a deal with B2 Gold for shares and cash, we unlocked a lot of value for B2 Gold share, the ownership in their shares as well. That then led to, okay, we're operating in Nicaragua, which, as we know, has a higher discount rate because of the jurisdiction. So let's then start to take steps to see what else we could do to diversify that portfolio. A very logical thing to do for a single asset, single jurisdictional producer. And that's which led to the Fiore transaction. So looking at, what were we looking at there? It wasn't necessarily the asset itself, because the asset itself, it's a smaller 30 to 40,000 ounce a year producer. However, we believed it presented a compelling opportunity because it had good exploration upside and it was located in Nevada, right? That gave us a footprint into the Americas, into North America, into Nevada, which, as most of your audience would know, is probably one of the better jurisdictions for a gold miner to be. That, interestingly enough, then led to the next transaction. And interesting, we were looking at maybe another merger of equals. Okay, now we're in Nevada, we're in Nicaragua, we've got a platform, 200 to 250,000 ounces a year. Maybe there's an opportunity to merge companies, and we were very close to doing something. It didn't quite work out, but we were able to pivot quickly and look at, with a fresh set of eyes, what else is out there in terms of development and producers. And we quickly recognized Marathon Gold. It was in Canada, again, a great jurisdiction, 5 million ounces of gold in Canada. We recognized that the team needed capital, and, how Darren ran the business was very lean. We had no debt. We had about $125 million US cash on balance sheet. We were generating good operating cash and free cash, and we were producing about 200 to 250,000 ounces a year. However, majority of that production was still coming from Nicaragua, again, a higher discount rate. So by doing a deal in Canada, we could reduce that discount rate and have majority of the production then coming out of Canada. Would that be an attractive product for a shareholder? Would that be an attractive product for us to see share price appreciation? Absolutely. So you go through your due diligence and see what are the strengths, weaknesses, and opportunities there. And quickly we saw that, okay, there was a need for a seasoned operating team. There was a need for capital. We also had a need, right, to diversify our production and jurisdiction. So it was a win-win deal. So we always try to look for ways to unlock value for our shareholders, but then also, a target shareholder base as well. We want to see a re-rate come for all that are involved. And this was predominantly a share deal. We did do a private placement into Marathon, but this was a share exchange deal. So that if you kept your shares, and if you look over the last 16, 18 months, the shareholders of Marathon, the shareholders of Calibre both did very well through this transaction. And that's really what we're ultimately looking for is capital. It's not necessarily capital preservation, but capital increase capital, share price returns. That's really what we're all looking for. And what are the ways to do that by mergers and acquisitions? You obviously don't want to do something that's going to reduce our or increase our discount rate because of a jurisdiction that we're going to, right? Or, there's various things you have to look at and various criteria, but mostly we as a team come together and look at, do we think by doing this deal and issuing these shares that it's going to have a positive impact on the share price? I mean, that's ultimately the focus. And we're not, the one I think important aspect here is that if there's a deal to happen and we are no longer employed to run the business or be involved in the business, that's okay. Whatever's going to be in the best interest of shareholders, that aligns shareholders such that, again, we get that return or that re-rating that should come from an accretive merger or acquisition. That's the most important thing.
In Nicaragua, you've got a guiding of 230,000 to 280,000 ounces for 2025. Do you expect seasonality from production out of Nicaragua? And how sustainable is this kind of production moving forward?
Well, that's a good question. Now, that 230 to 280 is for Calibre consolidated, and it does not include Valentine yet. So, at the beginning of the year, we put out 200 to 250 in Nicaragua. Then we put out, included in that same outlook was 30 to 40,000 ounces out of Nevada. And so Nevada is pretty even keel on a quarter by quarter basis. We have seen not necessarily seasonality, but we have seen in Nicaragua where we've had a lower first half and a higher second half in terms of production outlook. This year, I think it's going to be pretty flat. We actually just came out with our Q1 today, actually, and we had a very strong Q1. We produced on a consolidated basis, we produced over 71,000 ounces of gold for Q1. So setting the stage for a strong year. And I'm very excited about this year as we advance Valentine and then bring that into operations this year. I think that's really going to have a lot of value created for shareholders of Calibre.
With the obviously merger with Equinox and a potential re-rate, as you mentioned, on the horizon, following Valentine coming into commercial production, obviously, and also combined with the cash flow from Greenstone and Nicaragua, will you be generating a lot of cash from those activities? And currently, are you looking to sort of reinvest into the business through funding Valentine and robust exploration programs? And would you plan on returning money to stakeholders in another way? And if so, how?
Yeah. No, those are great questions, Rob. Obviously, that will eventually start to get worked out. I mean, where we're at now is the shareholder approval vote or meeting will happen April 24th. The proxy advisory firm ISS has come out and recommended for this transaction to vote for the transaction. We're waiting on Glass Lewis to come out with their recommendation. But assuming they come out with four, we expect the vote to be supportive of this deal. Go ahead on April 24th. Then you're about a week or two later. You've got your British Columbia court approvals, and then we're working through the Mexican competition or antitrust approvals, which could take a bit of time. But we would expect the close to happen sometime the end of May or maybe early June. At that point in time, new management. So at this point in time, we know that Greg Smith will be Chief Executive Officer of New Equinox on the combined pro forma basis. Darren Hall will retain the President and Chief Operating Officer of New Equinox. And my understanding is Pete Hardy, CFO, Chief Financial Officer of Equinox, will retain Chief Financial Officer of New Equinox. So that is their senior management team or C-suite of the new business. At that point in time, there will be quite a thorough review and setting a strategy and North Star going forward for the company. But I believe, based on what I've heard, yes, absolutely. As you continue to ramp up Greenstone, and I think the second half will be a very strong period of time for that asset as it ramps up. Of course, that dovetails nicely with the ramping up and beginning of Valentine in Newfoundland. We'll be generating some very good operating cash flow, but also free cash flow when you look at the combined consolidated production outlook for the company. And when you look at the average all-in sustaining cost across the business, I think analysis has been done, and it's probably somewhere around $1,500 to $1,600 to produce ounces of gold. And then you've got exploration, you've got some additional capex on top of that. But needless to say, we'll generate at these metal prices some fantastic operating and free cash flow, which allows the company to then, and I think the focus for New Equinox, and I'm kind of speaking out of turn here because this isn't my role yet. It isn't a done deal yet, but I think the focus will be to quickly delever the balance sheet. I think there'll be about a 1.8 in total of debt on the balance sheet. So quickly delever that, and you'll be able to do that based on analyst consensus, I think. And these are done at lower gold prices. I think you could delever that balance sheet within the next approximately 24 months. So very effectively, assuming, you're delivering on all your operations and, metal prices, you remain sort of in that $2,800, $2,900 gold price environment, you could delever very quickly. But I do believe the goal is then to reinvest some of that operating cash flow back into the business because they've got some assets in the portfolio that could see some exploration, like Valentine, like Greenstone, and others. But also, Equinox is working through a phase 2 permitting for the Castle Mountain asset in California, a small heap leach mine that is currently on care and maintenance and going through permitting of phase 2 to bring it up to a 45,000 ton per day heap leach asset. And so working through the permitting there for that asset. And what's great is, as we've recently heard, President Trump talking about or delivering an executive order for critical metals in the United States, and gold falling into that critical metal in executive order. So we could see an expedient permit for phase 2 at Castle Mountain, and then building out the remaining upside to that opportunity, which would present another 200 to 250,000 ounces of production from the Americas. And then working through Los Filos. Los Filos is currently on care and maintenance, and but it is a tremendous opportunity as the company works through community relations, community work with the 3 different communities they have there. This asset is the 4th largest gold asset in the Americas, so a tremendous opportunity. And what the company, the vision of the company is to eventually put a CIP plant on place there, build out, I believe it's a 10,000 ton per day plant. Roughly, I think based on the feasibility study, was about $350 to $450 million to do that. But then you've got an asset that is producing approximately 280 to 350,000 ounces of gold a year in a long life, low cost, multi-million ounce environment and mine complex. So there will be reinvestment back into the assets, I believe, but ultimately it is really quickly delever and then look at ways to return capital to shareholders. And I believe that Equinox is looking at those types of opportunities. Obviously, one might be a share buyback. Also, I think top of mind would be a dividend policy for new Equinox shareholders. I believe that would be a great outcome. And by putting that in place, that alone would open the company up to different group of shareholders that are mandated to invest in companies that pay a dividend. So that would open us up to a whole group of new shareholder bases that would add to share price performance as well.
Calibre emphasizes community engagement, and with 95% of its direct employees in Nicaragua being Nicaraguan nationals, how do you ensure that Calibre's operations contribute obviously positively to local communities? And what initiatives have been most impactful?
Yeah, that's a priority for Calibre, and I think honestly, Rob, that has been one element of our business that has been critical to our unlocking value in Nicaragua. As you said, I think it's 97 or 98% of employees are Nicaraguan national. And when we look at all the communities in which we operate, a very high percentage is coming directly from those local communities as well. I guess that's important to us because you will get a very supportive ambassador-like workforce, wanting to work for the company. But it's important just from a perspective of delivering value to those communities. It's not just about maybe putting in potable water or putting in maybe if you need to relocating a community to new housing, which we have done as well, and created long generational new opportunities for families. But it's also about empowering people and ensuring that people get the training, the education, and career opportunities to enable personal gratification and personal growth. So I think that's very important to see people change that way and people have those opportunities in order to contribute not only to those communities further, but also contribute to the business as well. So I mean, that's been That's been a really important aspect of, I think, almost any business. But for us, as we look at how we operate within Nicaragua, having different what we call spokes or satellite deposits. So we've got operations all around the country. It's all interconnected through good paved Pan American highways. How we do our business is really important. So we hire a lot of different local contractors, but we outfit vehicles, so trucks that are on the road. We take a very, I believe, take a very prudent and responsible approach. So we equipped every truck with cameras in the front and the back, so we know what's going on. They're always being recorded. Governors on the engines for speed, GPS units on the trucks so we can track and watch and know, if there's any issues. So we try to take the most responsible, I guess is the right word, approach from a safety perspective, so we can keep our employees safe. And I think that has led to a level of uptake with all of our employees and communities, because you're driving through communities through the tips and the tails of these operations, so you want to make sure you do that very responsibly. And then we can contribute to those communities because of the not only the people, but we're delivering value from responsible gold extraction and production, and then reinvesting that capital back into investment, or in terms of exploration or in terms of development, such that we can have a sustained operation. When we started in 2019, we had about 125,000 ounces of reserves. We were expecting somewhere in the 50 to 70,000 ounce a year production profile, and that the second asset, called Libertad, the 2.2 million ton per annum mill, was actually going to go into closure. Well, because of the way that Darren has been able to organize people and the operating strategy, we've been able to unlock, I think in the course of the last 5 years, we've probably got 12 to 13 major permits approved, whether that be an in-pit tailings permit, a wall pushback, or a new satellite, a greenfield satellite approved. We've been able to do that because of a strong mining legislation that's in place, but also a proactive and transparent, with regards to public consultation and community engagement, approach to how we do the business. So I believe that's also benefiting not only the communities, but also those contractors and employees of our business. And now today we've got 1.1 million ounces of reserves. So we've replaced reserves, and we've mined and produced 1 million ounces of gold in that period of time as well. But I think if we were all to go to Nicaragua and ask communities and people, I think that I would like to think that we would have a good social license to operate, and we would have good responses to where we operate and how we operate.
Yeah. And lastly, and concluding, what's the short to medium term outlook for Calibre Mining? And obviously the deal with Equinox, and if there's anything else that you want to inform our audience about.
Well, I think we've probably touched on a lot of these things, but in the short term here, it's finalizing this merger with Equinox. Calibre ramping up the Valentine Lake gold mine, so that we want to see that transition into a steady ramp up to nameplate 2.5 million ton throughput, as well as unlocking the continued unlocking of value through Greenstone as it ramps up to nameplate capacity. So when you get to nameplate capacity, and I would imagine that something this collectively should happen over the next 9 to 12 months, maybe less, as we ramp these up, and you're at 550 to 600,000 ounces of production. So first and foremost, getting the deal done, integrating the teams, the people, and setting up the stage for a very healthy and hopefully successful new merger and a new 1 million ounce a year gold producer within the company, but also looking at all of those organic growth opportunities within the pro forma business. And then hopefully we're getting to a point in time where we can get return capital to shareholders in unlocking the value of the combined entities. So those are really the critical steps over the next couple of months here. And I believe that we have the team and the people and the combined businesses to do that. So looking forward to the future.
Yeah. Ryan, thank you very much for your time. Thank you for sharing your story and telling us obviously about Calibre Gold and everything that's happening with them, and obviously the hopefully the new acquisition with Equinox. If our audience wants to reach out to you, if they want to follow the story, if they're not already following it, how can they go about doing that, and what social media platform channels are you on?
Basically, the best way to do that is via email. I would say is calibremining.com is website. You can reach me directly at rking@calibremining.com, and hopefully I'm quick to respond to you. But please give me a day or two, as there's a lot of emails coming in. But especially at this time, as we get close to completing that merger, and then you can find our phone number on the website, calibremining.com as well.
Yeah, great. And all those details will be accompanied with the show notes for easy access. So wish you well for the remainder of the year, and obviously over the coming months as the deal closes, and obviously for the remainder of 2025. And hopefully you can come on the podcast either later this year or next year and give us an update on that merger and how it's played out.
I'll have only positive things to say, Rob.
Yeah, certainly. Well, thank you for your time, and we will speak soon.
Thanks, Rob. Take care.
Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. And please share this episode far and wide. Exciting deal that is going to be closing soon. So want everyone out there in the mining industry to obviously listen to what Ryan's just said, but also maybe people outside of the mining industry. Gold's a hot topic at the moment. So it's good to inform people outside of our mining industry what our industry is about. And obviously, Ryan's discussed a lot what's going on within gold and with a couple of big companies coming together. So thank you for your support. Please keep sharing these episodes. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.